This video, I want to show you the rates of return for the US stock market. I want to show you the order those rates of return came in, and then I want to show you the impact the order had while you were accumulating your investment portfolio. And I'm going to use this great learning tool by Money Guide Pro, and they've turned the stock market into a card game. And you can play at any table. This table here is 100% bonds. This table is 100% stocks. And of course, we can play anyone in between. I'm going to come to the table with $100,000, and I'm going to add an additional $10,000 every year, and I started in 1981. So let's go ahead and let's play the game. So here are the historical rates of return, minus 522, and the average rate of return over that 30-year time period was 10.7%. Okay. Now, I'm going to play the game here. I'm going to select all the cards at once, and we've accumulated $4 million if we got the average rate of return. But we didn't get the average rate of return. We got a little bit less because that's the way the stock market worked in this case. What happened? Well, we took the $10,000, we invested it, we lost 5%. Next year, we made 22. Then we put in another 10,000, we made another 23%. Okay? And if I go and shuffle the cards with the same rates of return, we can see we get a different answer. Here we have 3.8%. Let's shuffle. And now we got $5.1 million. Okay? But let's go back to our historical rates of return. And I'm going to say that we start to invest now in the year 2000. So we have some poor years when we start. Okay? So let's go across. And what we see at the end of 10 years, we've actually made nothing in the US stock market. And of course, at this point, you may wonder why we to continue on. But let's continue on. And we can see here, after another 10 years, we've now made about 7%. We made about just over $1 million. A little bit less than the average rates of return, but we're doing not bad. And let's just finish it up the 30 years. And now we see, actually, we've done quite a bit better than the average. We've made 6 million rather than the 4. And of course, that's all to do with the sequence of returns. Okay. Now, of course, for this to work, the stock market does have to give a fairly consistent return over time, which in fact, if you look at the data, it does do that. So I hope this was helpful. It's a great learning tool. If you have any questions, please let me know.